Welcome to August 12th, Alpha Stochastic Up Trend forward testing. We have now 23 in play and we had 2 losses already. So let's go look at today's chart. There we are starting off with Denny's, and Denny's is moving up nicely. It's very on the verge of clearing the first ratio. Remember, the same gantry rules as down here. Price clears above the EP. We get the stop here. Move the stop from originally down here from the swing low. Move it here, and then move it to your entry point, and then once it clears the first reward ratio, then move it there. It has not cleared that first reward ratio. We want to get it. We want a full candle up here without anywhere touching 16, 17. Also, too, remember there is no buffer. The buffer is when you do your first setup down here. So it's just this here being a close. We'll go and bring up the data box. So right there, we entered here on the close with 1485. So this entry would have been maybe 1490. You could add a little nickel, round up next zero, or leave it at the 5. 1485, done. And then the low here on the swing low was 1356. You can use your Rockwell exit rules, which is 1 penny, and it'll be 1355. And reasoning, and it falls right into the same rules that the market wizards keep talking about. Risk management, risk management, risk management, and risk management means keeping tight stops within reason. And then there is one trader who will do an entry here, and the stop will be at the end of the day. If price is slightly below his entry point, he liquidates on the next day and gets out. He wants to see this right away. This is what he wants to see. All right, and I forgot what I mean. There's so many people in those books. It's incredible. So let's go on to MAC, and AMC it's not clear. It's clear the gantry. So now the stop is right there. That's why I put these drawing lines. Oh, you know what? Forgot to do that on the on Denny's. Let's go back to Denny's, and put in Denny's stop line. So Denny's stop line now is here, right in there. That's close. There we go. So that's where the stop is at because it's cleared the gantry. And now we move on, and we did MAC. MAC is done. And now we'll go on to VI. Let's see. Oh. VIR. There we go. And it cleared this first gantry. So now it's here. And also price cleared the first. It's actually cleared the first gantry. So actually this would have been a stop right here. Because we're gonna apply the gantry rules, and then we can call that a win. So this is actually gonna get taken off the list and be put down as a win. So putting a W next to the list, and they'll be added to the wins. So it'll be a first ratio win. And that's another thing too. You have to establish your exit rules before you get into the trade. So we're doing the initial, then we're doing gantry clearance, entry stop. Once it clears the first ratio, like that one, that's a doji. So the first ratio, stop right there, and we would be stopped out here, and then that would be declared a win because this definitely would give us some kind of win. Maybe even breaks very tiny, as you can see from other trades. Okay, going on now to USB. USB, and it's clear. Look, it's cleared its first gantry right there. Cleared the first gantry. So now this stop is here. So let me back up. I just realized that we should do on these two that we do not make any mistakes. Go ahead and note that this is a 8/11. It actually would have been stopped out here on the 11th. 8/1 win. And we call it the first ratio win. So that's what it was. It's first ratio win. Okay. So so it's important to put and put I put my notes on the charts because if I flip through pages, I might get messed up with somebody else, and then that's not good. Okay, so it takes us on now to docs. And it hasn't cleared that first gantry completely. It's still too tight. So that is going to stay where it's at. And now we're off to FE. And see what the problem here is. There it is. Okay, we got it. And the entry price was on the high. Because this was too narrow. We could have gone here to the top of the body again. This portion is unfortunate discretion. Some people really want strong confirmation, so they'll go for that high. Some say, I'll take it on the next one and I'll just make my stop tighter. The entry 38.40, 38.39. So actually this order has not triggered yet. It's still 1 penny short. 1 penny short if we go by our strict rules, because 39.40 is the entry. No, 39.40. Nope, wrong. Oh, 38.40. Was right in my first hunch. Okay, so 38.40. So this order is not triggered as of yet. Okay, going now to VRAC, Paramount, and then declare the first. So this order to the stop is still here. Stop is still on the initial because it has not cleared the gantry yet. It hasn't cleared. But look, nice support right there in the middle of the entry exit on the 50% retracement. So that's good. Okay, that takes us now to discovery. And discovery here. So it has not cleared. So the stop is still here. Stop is still here at the risk ratio. Okay, Saber. And stop is still here at the initial. So right there. And OMC. Now what's going to be really cool is remember I said earlier too about forward testing. How long do you forward test? Well, the general rule is 2 weeks to a month. So we're going to take this to the end of August. And at the end of August, we're going to have so much data that we're going to be able to get a win ratio out to this. Now, does that mean everything that we picked was option qualified? No, but at least it shows that the foundation of the base of the plan strategy is extremely important to start, and then go into your options criteria, what that might be. So OMC is still here at the EPS. So now that takes us to GT. And GT first still at the EPS. That's good. It's still in the game. Monster. Okay, EPS getting close. Now, the Monster is actually a trade that the alphas would had if we had the money at the time to get into this trade. So kind of cool. There's the old notes. You're not gonna be seeing a lot of the old notes as they eventually will clear out to the new version that you saw in the first video for note keeping on the charts. Okay, has not cleared the gantry. Righty on. American Eagle Outfitters. Also two now here. This is a stop, so we had a loss. I'm going to call it a loss. Why? Because the AB is definitely going to affect the ask bid price. Also, two, you have the commissions in there, so it'd be a loss, but it'd be a loss very tiny. We have seen EP a small loss as 4%, and we've seen EP exit as much as 15%. So it's a loss. So we have a loss. You can put that down. Oh, EP. It's an EPS. It's an EPS loss. Okay, go to my list again. I apologize for the delay here, but I got to keep this current. So now we have a loss. Okay. Now we move on. Well, our next candidate of interest is ETWO, whoever they are, ETWO, and they haven't declared the gallery, so they're still at their first initial stop. And NRXP, it's still here at its first initial stop. And CCJ, and it's still also at its first initial stop. And AT&T. Now AT&T is a trade happening in the alphas, so I had to put a note here that this is for forward testing. The original AT&T trade is way back here and is an original date to expiration trade, which means there are no stops. That's where you see this AT&T will be here all the way until October. This is an October expiration trade, but for the forward testing, it triggered but did not continue. Okay, so let's go on now to AMLP, American Limited, I think they're called, still in the initial already, and PAGP, and it's also still in this initial. Okay, and then F for Ford. Ford has not, it's also still in this initial. I'll go ahead and put the line down here. Makes it a lot faster to spot when you need to spot it quickly. Okay, then I think it's Wendy's, WIN, yes it is. And it's cleared its first ratio, so now its stop is here at EPS. It's cleared the gantry. And USO. And USO may be triggered. The high is 48.34, so 48.35. The high is 38.35, so it would have triggered. This trade would have triggered, and there is the stop right there. So that concludes the list for the forward testing. Now we're going to go to scanner time. So here at scanner, we're going to load up only the one scanner that we're testing, and that is forward up the Stochastic Up Trend. And we change it to all optionable right there. And then we're going to change our criteria to $10 to 100. We're also going to change our volume criteria to 2 million. And the system says that we have about 3,000 stocks, and away it goes. And then we'll see if we have any additionals added to this. And we do. So now Bumblebee. So we'll come here, go to our chart right there. And then Fibonacci, and this is a long candle. This is a good example of how, what do you do? Well, you got a long wick here, and you got a somewhat wick here, and you don't want to make it so wide so that it's not going to have an opportunity to clear, not just clear the gantry, but you want to get to that first ratio ASAP under risk management. So we'll go to the bottom of that candle, and also too, it's lower. Look at your swing lows. Swing lows here, swing lows there, swing lows here, swing lows here. The end result is this: you have no choice to go there. Now, if this is the low of the year thereabouts, this would be a portfolio managers will be looking at buying at this, and then they'll be buying it at, well, they already did. See, price came down, touched this zone, and they liked it. So I'm going to round 44.25 times 20% that they're looking for in profit taking in the 53.1. So 53.1 is where they're going to be looking to take profit. So we'll go ahead and draw a little line at 53.1 as a line to see if the theory holds true. Oh, you know what? I should use the price channel. It's much more accurate. Okay, and right here we'll go possible portfolio take profit, and 53.1. Okay. Oh, you know what? This is too long. So portfolio, I'm just going to say portfolio take profit. That's all. And now we got the okay. If the title's too long, it won't take it. All right. So next are, oh, and then Mark, I believe we did a trade on this earlier. Yes, this already had a loss. So we have a new loss. Let's go ahead and write that down. That was a loss. That was one of the, when we first started this a while ago, a few days earlier. And now we'll put down a loss for them and a new re-entry. So now we have a new re-entry. So we'll come down here, top of the candle, low swing. And now this is testing November 72.5, asking 570. That's what this was. So we could do the same thing. We can come here and just arbitrarily pick something. That's, remember that we're looking for November. So we're looking at something within our parameters to keep it real. And it would be this one. So we're now going to be looking at November 772 at 490. So 772, 72.50, that's correct. And now we'll go ahead and put 490 here. And this is another way of forward testing. So that's another way of forward testing. Okay, so now back to our scanner and to close off CG. And now we'll come down to CG and come back here to CG and CG. Oh, look at that entry. Oh, that is such a sweetheart entry right there. Right there. Right there. And you know what? This is also known as buying the dip. Right here. This is known as buying the dip. So you say buy the dip. Come down, got dip, got entry right there. And then you pick up all that. And then your exit would be whatever would be 2 to 1, 3 to 1, whatever you're looking for. If you're a long-term trader, you possibly go for the 3 to 1. Let's go see what the Fibonacci would have done. Well, actually, it would have been based off this. And even though you got filled here, you still go use this relationship. And I have to stop, pause for a minute, please. My apologies. So this is a good case study of the CG where we were looking for. Then who would have found this? What scanner? Well, let's look. Stochastics is going up. That's good. RSI is going up. We have a green histogram, but the EMA would not. See, the EMA is dropping. The scanner, the EMA, this scanner would not. The scanner would have picked it up here. Had we done this back on June 21st, we would have picked it up here. And it would have been the high here to the low there, and then you'll be looking at that. If you're doing it off the dip, you would have entered it on, even though you got filled here, but the point was you set up your parameters from this, so use your parameters for your exit point. I know some people say, you know, once you do this, then you adjust it. Well, the problem though is that you want the more narrow. And once price is clear the gantry, your EPS anyhow. And once it's clear the first ratio, you can be at the first ratio. Once it's clear the second ratio. So now up here, it closed, it didn't clear it, but it closed above it. You could say right there, and then, or take profit at 3 to 1. 3 to 1 profit. This is definitely a very good 3 to 1 profit. Okay, back to reality of what we're doing. We're coming over here and entering it here. There's a swing low, and now we have our test for the future. And with that said, we're going to thank you very much for stopping by and checking out forward testing for August 12th with 23 in play, and then the loss will be updated at the conclusion. All right, catch you tomorrow. Thank you very much for stopping by. Bye-bye.